What's the biggest surprise in a good way? What things are you negatively working with?
Sure. So coming over from the correspondent realm of retail, it was hard to get used to all the different possibilities for solutions and loans. Getting 30 or 40 different investors to work with is awesome because everyone's competing for your business. It's also at the same challenge a good thing. It's also a bad thing because each lender has a different process. Compliance is all done differently from
Lender
each
portals,
investor.
passwords.
All that stuff. So I'm excited to see what AIME's up to with helping us get through those transitions as an industry to make that more standardized, because that's one of my biggest challenges is just the confusion around that. But every day that goes by, it's getting better and better from a perspective of originating, and the team's getting more comfortable with every transaction we do, and it's just exciting to see the energy put in this channel, and I appreciate all the stuff you've done day and night to make this happen and get started.
So, I mean, from your standpoint, when it comes to fulfillment, you were obviously at a big retail lender, national retail lender for many years. Has there been any drop-off? From a customer experience level, your realtors, are they happy with your ability to take an application and take it to closing within a reasonable time? That's one of the biggest myths that we hear from retail guys is, hey, I can't lose control. I have the underwriter in my office. I can't, control the process. So, are you in a position where you're seeing that as a real fear, or is it just a myth?
I think it's a myth. It all comes down to how complete the packages you submit. What I've found in our channel, we're about 70% purchase. So that's important to meet deadlines and follow through on your commitment and your word. That's everything. You're only as good as your last transaction, as we all know. And so what I've been happy about is the partners that are invested with us are willing to follow through on their word also, because if they don't follow through, it makes us look bad.
That's right.
It's easy for them to hide behind a big corporate office, but certain investors have really stepped up, and I appreciate and respect that, and that goes a long way for not only today, but my future relationship with those companies.
It's a big deal. I mean, it really is a big deal. I think that's the single biggest game changer from before the crash to now, is I do think that lenders were, sort of just looked at as, you put your loans there for underwriting, you followed a process, but you were at their, whenever they got to your file, it was all in their hands. I think today we're now in a situation especially with UWM and Home Point, some of the leaders of our channel, where UWM's at an hour, 2 hours in underwriting, condition review. So, if you can't deliver fast service, great technology, and I would say even to a degree the most competitive rates or as close to the most competitive rates as possible, you're not going to be able to compete. You're not going to be able to be a lender that gets market share. So from your perspective in Northern California, I would imagine your average loan amount has to be
like 550 range, roughly, high balance limit, roughly.
So you got high balance, jumbo market. What did you pick up in rate, in pricing from wholesale to or retail to wholesale?
So we picked up about 3/8 difference in rate was what it was, and more importantly, more customization.
Got it.
So a lot of these top leading companies like UWM will create custom pricing models that we can go out and spend that extra time that we have now being more creative in the way we get loans and put them together and package them. So
that makes a lot of sense. So if 3/8 in rate, realistically speaking, in Northern California, if you're a 500,000 borrower looking, shopping around for a loan, there isn't that much margin out there. These consumers are intelligent. They're shopping around. The reality is that what I see in Northern California, in Sacramento, and even above that, is it's a heavy broker market up there. I mean, there's broker market share in that part of California is 25-30%, and the reason why is the bigger the loan amount, the bigger the discrepancy between retail and broker. Now, I think we're starting to see that across the country, but from your perspective, what percentage of your deals did you used to lose because you couldn't compete on rate?
Yeah, great question. So it was probably about 30 to 35% we would have more competition with the large banks. When a client goes in and goes for their statements or goes to do a wire, some of those larger banks were trying to buy back the business because they didn't do a good job getting the business. And what I would say now is my pull-through is close to 80% to 85%. Obviously, we want it to be 100 if we can.
Yeah, absolutely.
But
you pick up 15%. So you went from losing basically 1/3 of your business to those banks. Now you're competing against the same banks. Those aren't non-bank lenders. Those are true banks.
True banks, yep.
Because in Northern California, it is more of a bank market. But now you're able to pick up an extra 15%. So if you really think about it over the course of the year, if you're doing 100 transactions, that's 15 loans at $500,000 a pop at a 1.5% or 2% margin. that adds up a lot. So
Absolutely.
it's not just, for me, a lot of people look at it and they say, well, how much price am I picking up by going from retail to broker? Or, is it that big of a deal for me to give better deals? And I think the one part of the economics they don't factor in is really like, it's not just what you're picking up in price, it's also what percentage of your business are you now able to retain because you're able to offer a better price. So if it's 15%, that's going to equivalent to hundreds of thousands of dollars a year.
And also, let's talk about the time I save. So versus babysitting a file for 75 days at maybe one of those large retail banks, I'm able to perform quickly. I can move on with a great customer experience to go get more, right? That's the best thing I can do is say that I have more time on my plate to do things like this, have better relationship-based activities, connect with my clients to a deeper level, all those things that create more bandwidth for me to be able to be better at my job and offer that trusted advisor experience versus we'll be at underwriting in 30 days from now and I need 6 more sets of documents and I'm sorry it's taking so long. So it's just the time for me is what I like.
Absolutely.
You have kids too and I have kids and that extra time can be made up there with family stuff too.
It's a huge deal. And I think that's one of the things that people don't talk about is really, whether you're going from retail to broker and becoming a broker owner or retail to becoming an LO that works for a broker shop, I do think that, you're not just simply creating more income for yourself, you're also in a position where you're able to have more control of your lifestyle. You're able to be in a position where like you can make the decision to work, a better schedule, a more balanced schedule by not having to hustle for every single deal because you're losing 1/3 of your business to banks. So I would just say in our experience, like we did an audit of our CRM and we talked to 4,500, 5,000 LOs over the last year that were retail LOs that are interested in becoming brokers. And the conversation points tend to be the top 5, same conversation every time. A lot of guys were brokers before the housing crisis and lost everything or had a major setback in their life. So there's just this general fear of like, hey, I've been in retail and this is what I've been doing since then. I'm scared that, everything could fall apart again. So like, that's the number one thing is the unknown, the fear of, potentially a housing crisis happening again. That was a once in a lifetime economic situation. Second thing that we see is like ability to control the process. Like, I work for a retail lender. I have my underwriter in my office. I have control over the process. I can close for my realtors. Well, the truth is like mortgage brokers' market share, it's not refi, it's purchase. The average broker is closing loans, with the top lenders like UWM in less than 17 days. So you're in a situation where, you have reliable service, you can control the process, you can be purchase focused. And the last piece really comes down to this is like, from a standpoint of technology and resources, I think that, there was a point where the lenders' platforms were not very competitive. The broker experience, the client experience when it comes to interacting with the lenders were, not very good. Today, UWM is essentially, to a degree, if Quicken is the best technology lender in the retail space, UWM's the best technology in the broker space. They've built a mousetrap that enables brokers to, have their brand 360, their point of sale, like all these different resources. And all the other lenders are building tech to match that level. And for us, obviously we have a partnership with Arrive to offer that to brokers. That's the goal there is how do we normalize the experience across multiple lenders to, be as close to a UWM as possible. So, for me, as far as Mythbusters, really comes down to understanding that like talk to a broker, talk to a loan originator that that became a broker. Don't be surface level. Don't let your market leader or your recruiter or whoever in your organization dictate to you kind of like what the broker channel is. Because what we do know is guys like Jim that have come from lenders that might have a P&L model is everybody's incentivized to kind of tell you what you need to hear to keep you there. So becoming a broker is about you, it's about your family, it's about creating wealth for yourself, but it's also about creating a better quality of life. So, Jim, thanks for coming out. We
Absolutely.
appreciate
Thank you,
it
Anthony.
as always.
Appreciate it.